If someone wants to become a financial planner, what's the very first step they should take, Dave?
I think the first step, James, is probably to actually analyse what they think being a financial advisor is, because unlike other professions, there's no set standard for what is a financial advisor. All financial advisors ultimately are probably giving advice on regulated products and investments, etc. But philosophically, there is a real spectrum of firms and a real spectrum of practitioners and the way they go about things. I am pretty well known for sort of having the opinion that financial advice is provided on two sides of a fence in the UK. And normally what I do when I start these conversations is ask people what their own understanding of financial advice is. Most people talk in terms of it's giving advice about things like insurance and pensions and investments. And that sort of indicates to me that they think financial advice is quite a transactional process. There must be a regulated product at the end of it. And the whole thing is gearing up to give advice about products. Well, I actually, over the last sort of 30 years, developed quite a different approach to that. And I think there is a growing movement that's developed a different approach to financial advice. And that's what I'd call sort of proper professional financial planning. So there's a lot of firms and a lot of practitioners out there who focus more on the planning, giving people holistic advice about financial matters that may or may not actually result in the need to recommend some sort of insurance, pension or investment. And I actually, in my career, spent quite a lot of time with people where I was giving advice, but not actually recommending a product. And there are quite a lot of what I would call financial advisors out there now who don't actually still have an authorization through the Financial Conduct Authority. They're quite happy that they can build a business and have quite an enjoyable career by simply giving advice without recommending any products whatsoever. And I think the crucial point to emphasize to anyone looking at financial advice as a career is work out perhaps which side of that philosophy you're on. Because if you're more on the, I want to give proper professional holistic advice, and I'm happy to stop there and let people arrange their own products, investments, etc., then maybe you don't actually even need to pass any exams to do that, because it's the product recommendation that's actually regulated, and it's the product recommendation that actually requires you to pass whatever set of exams you're going to pass. But and it's the product recommendation that requires authorization by the FCA. So the starting point is that I always sort of flag up that difference in philosophy and ask people to sort of think about that before they even start looking. Because if you are sitting on one side of the fence or the other, it might well very definitely sort of impact on how you go about things from there. But assuming most people sort of say, well, I do want to understand products, I do want to be able to give advice, recommendations as regards products and investments, then the next thing to do is work out, again, really which side of the fence you're sitting on. It's well known that there are some very big academies, in inverted commas, out there, and most people I talk to are aware of them. The big academies are all really run by product manufacturers and investment managers. And I'm quite cynical about those. I'm well known for being quite cynical about those. I rather impolitely perhaps use the term, I think these are more sales training schools than proper professional advice academies, because I think they are. The product manufacturers earn their income from the sale of product and investment. what they really want is to train people to get them through the exams, to get them into a position where they're able to recommend those products. And then what they really want to do is get them out there recommending those products. Of course they do. It's entirely logical. Those are really, sadly, where most of the opportunities to get into regulated financial advice sit, on that side of the fence. And it's pretty obvious why, because these product manufacturers need to keep growing their sales forces. Sadly, the opportunities on what I would call the proper professional side of the fence are much more limited, but they do exist. And I know over the course of the last probably 15, 18 months or so, I know I've helped about 30 people find these all important starter roles. And what I see on forums like LinkedIn is more firms actually looking now to take on trainees. So the opportunities do exist. It's a question of, again, working out which side of that fence you'd like to be on. And then if you do want to be on the sort of what I call proper professional advice side of the fence, I think the important thing is to explore that side before you start looking at the academies, because you may be able to find the right sort of opportunity on the right side of the fence. Not easy, but I've always got a few thoughts on how you might be able to go about it. But the other point I do make to people is it will probably be quite difficult to find an opportunity on that right side of the fence. Don't rule out the big academies. The two things that you need to become a regulated financial advisor, to give advice on products and investments and stuff, the two things you need are, firstly, exam passes, and secondly, you need competent advisor status, which broadly speaking means somebody signs you off as being competent to give regulated financial advice. Now, those two things are what you need. I think I said in probably the first or the second podcast I did with you on in the No series, I trained in a commission-based sales force back in 1988 or 89, whenever it was, because there was no alternative. I wasn't happy training in that environment. I certainly wasn't happy operating in that environment. But I saw it as a means to an end. And if you like, I kind of abandoned my principles simply so that I could get those two things, get the exam passes and be signed off as competent. And I always had that longer term aim in mind, because I knew once I got those two things, I could then begin to forge my own way and start to give advice the way I wanted to do it, etc., etc. But I think what I always say to people is, if you do go into those academies, be aware of what these organisations really are about. Most of them will offer to subsidise, in inverted commas, your transition from a cash flow perspective. I think I'm told that sometimes it can be quite difficult actually working out what they're actually offering to you in terms of cash flow. But as I understand it, the bottom line is they will lend you money to finance yourself so that you can meet your living expenses during this transition phase before you get yourself up and running. Now, that is, as I understand it, always going to be a loan. And if you think about it logically, no one's going to throw money at you to train you. They are aware that if you do transition from an established career into a new career, you probably will have to drop your earnings. It might be difficult to do it. So they're more than willing to lend you the money to do it. But the issue with that is, and I am quite cynical, particularly about one of the big academies, I actually think they use this loan funding almost as a way to trap people into that business model. Nothing wrong with that. There's no such thing as a free lunch. No one's got any sort of divine right to expect to be trained free of charge, etc., etc. But just be aware, if you do train in one of those academies and you then want to move out into a different firm on the other side of the fence, you might well be required to pay some money back. And I have had people talk to me over the last 15 months talking in terms of having to pay back £10,000 to £20,000 in order to actually leave the contract that they went into during the sort of academy phase. So just be aware of that, is what I say. I think if you are going to sort of try and look for an opportunity on the what I would call the professional side of the fence, then it's really quite important to do some research into the different types of firms there are, and exactly what these firms are going to offer. If you look at other professions, such as law and accountancy are the two that are probably most similar to financial advice, both of those professions have very, very established training schemes. And I've banged on at some length about the sort of training scheme I went through as a chartered accountant. It took about 3 years, start to finish. I had to do exams all the way through. I was actually given a bit of time off work to sit those exams. The firm paid for me to sit those exams. But there's more to becoming a professional than just passing exams. During that 3-year process, I was very closely supervised by a very, very experienced, very senior partner in the firm. And part of his role was not just to ensure that I was building the theoretical technical knowledge by passing exams, but he used to sit down with me on a regular basis every month to work out how I was getting on with assimilating that technical knowledge. Anything I was finding difficult, he would help me with it. He would be testing whether I was actually soaking up this knowledge, whether I understood what was going on. But he'd be making sure that my practical experience was also being aligned as well, because it's all very well learning the theoretical knowledge. It's the applying that technical knowledge that's really the difficult bit. So he made sure that I was getting the opportunity to apply the knowledge I was learning. He was also getting feedback from various people on how I was performing in other areas, such as how I was dealing with clients. What was my client service looking like? How was I representing the firm? What were my ethics like? And one other part of that training scheme was that I literally had professional ethics hammered into me right from the word go, in terms of things like conflicts of interest, in terms of putting the client first, in terms of never ever putting this firm at risk, in terms of never go beyond your competence, young man. If there's something you don't understand, do not take a stab at it. Make sure that you talk to someone about that. They will help you. There's no such thing as a daft question. We all want to make sure this works. So it was a very gradual transition from being a complete novice to actually becoming quite an experienced, qualified individual over 3 years, with a massive big safety net sitting underneath me. Now, again, sadly, even on the sort of professional financial planning side of the fence, those structured sort of training schemes over multiple years are very, very rare to find. We sort of put one together at Centurion, my old firm, but it was more really based on the experience I'd had and what I'd been through, and it worked quite well. Very few firms actually offer that kind of training. It's quite expensive to be able to do it, because not only have you got the trainee, you're also having a senior person who's also having to devote quite a lot of time to mentoring and bringing somebody on. So it's important to try and establish what sort of training will be on offer. And it's very hard to do that without actually talking face to face, but you may be able to get some idea from the firm's website. Because, for example, on the Centurion website, we had on there that the point that we had some trainees that were coming through. You could see that people had transitioned from a sort of administration level to a more senior administration level to a sort of paraplanning kind of level. So you can see that if these multiple levels of people exist, it's more likely the firm is going to be into that sort of gradual bringing you on over a period of years. I think the starting point is really look at the firm's website. And then you can see the personalities involved. And then you can start actually researching those individuals on the internet. You can see, the sort of thing these people are saying. You can research firms at Companies House as well. I mean, I am obviously a chartered accountant. Looking at Companies House is second nature to me, but most firms are structured as companies. Not always so, and I do know some that are structured as partnerships. Some very good, very solid, very competent firms are structured as partnerships, but most will be structured as companies. If they are structured as companies, you can research them at Companies House, and you can get the name of the company by looking at the regulatory wording, which should be at the bottom of somebody's website. The firm, Centurion Chartered Financial Planners was our trading name, still is the firm's trading name, but the firm was actually called Centurion Wealth Management Limited. So in order to research Centurion, you would need to look at Centurion Wealth Management Limited at Companies House. On there, you would see who's involved. You would see who owns the company. You would be able to look at the past few years' accounts. Now, with a smaller business, the information you're going to get from the accounts is really pretty limited. But you can, for example, normally see on there what the company's corporation tax liability was at the last published accounts date. If they've got a corporation tax liability, that broadly enables you to calculate back the profit that the firm was making. You can see from published accounts how many employees the firm has got. That's a useful reference point, because you could, for example, and there are plenty of firms out there where you can see probably 20 or 30 advisors listed on the website. If you check back to Companies House, you might see it's got half a dozen employees. Now, what that basically then says to you is this is a collection of self-employed advisors. What that then would suggest to somebody like me is that firm isn't particularly interested in training people over a gradual period of time. It is far more likely to say, right, well, we might help you get through the exams, but then, mate, it's going to be over to you. We expect you to be out there with all our other self-employed advisors earning your keep. So the combination of the website and Companies House can tell you quite a lot. But you might also, these days, from the internet, pick up all sorts of other ancillary things. For example, a lot of one other thing, actually, James, looking at Companies House, you will see how many owners the firm has got. If the firm only has one owner, you can check back to see the people involved. You can then check back to see who owns the shares, who's got the majority, etc. My preference will always be for a firm that's got more than one shareholder. Where you've got a sort of more collegiate approach, where you've maybe got 3 or 4 people owning shares. By the way, if the firm is structured as a limited liability partnership, you can also check back at Companies House, because a limited liability partnership has to file in the same way a company does. So you can get all this information. And the reason why I would personally prefer to see a range of shareholders involved, a range of personal shareholders involved, i.e. people, is I think it demonstrates a more collegiate approach. If only one person is making the decisions, logic says that there's a reasonable chance they're going to make quite a lot of wrong decisions from time to time. And I've freely said I've made some complete shockers in my time. I actually prefer to run a firm with other people because I'm fully aware that I might not be right. Well, I'm not going to be right all the time. And I'd like to bring in other people's views, give them a say, people I trust and get on with. The fact that people are owning shares along with other people shows that they're open to that collegiate approach. It would sort of suggest to me the firm is more solid. If a firm is only owned by one person, if some sort of tragedy befalls that one person, there could be a real state of flux. And also, I think, James, one firm that comprises, for example, one owner and a whole load of self-employed advisors, well, my view is that can be a rather fragile environment as well. If two or three of the advisors decide that they could get a better deal elsewhere, or maybe they want to set up on their own, that could fundamentally affect the future of the firm. And sadly, over the course of the last probably last 6 months, I think I've spoken to about 3 advisors, and I put these things up on LinkedIn, where they thought they had a trainee role in quite a solid firm, but it turns out that actually, no, they didn't. Something has happened to the firm. One I remember particularly thought they were about to get a load of funding from an investor. It didn't happen, and suddenly they were in the position of having to make redundancies. So you want to see a sort of solid firm. And I suppose you won't really find out what that firm is and how it operates until you've actually had the opportunity to talk to them.
So the question now is, once you've identified the firm that ticks all your boxes, what do you suggest in how you go about contacting those people to stand out and get a conversation going?
Well, I always said that, I guess, particularly as well towards the end of my career, I was very open to direct approaches. I actually, or our firm, it wasn't me, our firm recruited probably 3 or 4 people off the back of direct approaches. I actually welcomed them. Because I think it shows a degree of commitment. It shows a degree of self-sufficiency, making a direct approach. What it also does, James, is, in terms of these trainee roles, and I know I'm talking to a recruitment consultant here, I think you're unlikely, really, to find someone recruiting trainees through a recruitment consultant. I don't know. We can talk about this, because what I really think is we need some sort of exchange to bring together trainees and firms looking for trainees. But as a broad principle, making a direct approach would save a firm potentially a recruitment fee. I think it shows confidence. I think it shows determination. I think, it shows a willingness to get up and go. So I used to welcome those approaches. I'm not sure everybody does. And, it all depends on the personality of the person that you write to. But I think the starting point is you work out who to contact. And you might get a clue from the firm's website. You want to approach a sort of senior level, I'd suggest. I always say to people, I think it's good to write a letter, because I think emails, more often than not, people will just bin an email, or leave it in an inbox, not look at it. I do think, and I might be showing my age here, James, but I think if people get a handwritten letter these days, it's a bit of a novelty. And I actually said to a few people, if you're relatively close to where the firm is, I actually, used to really welcome hand-delivered letters. I thought that showed even more determination. They wanted to make sure that letter turned up, was actually delivered to me. I think what you need to do is put together a proper CV, and obviously you're far more equipped to talk to people about what a proper CV looks like than I am. But I think what I looked for in a CV was not, I'd want to see a bit of background experience, etc. But I'm not particularly looking at that. I always used to like people who put a sort of little statement at the top about who they are. And what I also say to people is it's not going to be the CV that's going to get you the job as a trainee financial planner. It's really important to put together a short covering letter as well. And I think, again, this is more your bag than mine, but I think if it goes on for more than one page, it might be a bit too much.
Correct.
But what you really need to do is distill something that marks you out to encourage people to think, actually, I quite like to meet this person. And so what you don't really bang on too much about where you've been and what you've done, because that's all going to be on a CV anyway. But it's more about what you understand a financial advisor to be, and what drives you to seek a new career or a first career in this particular field. And also what you can bring to the party. And what I always say to people there is think about what transferable skills you've got. Because I come back to anyone who's reasonably competent with numbers and the concepts involved can learn the technical knowledge. That's not the difficult bit. The more difficult bit is applying that technical knowledge. But if you can show that you have absorbed technical knowledge, that's good. But for example, if you've got other skills, perhaps even things like IT, that would be attractive to me. Well, it would have been at a certain point. I mean, at Centurion, as I've said on those podcasts, one of the first things we did, Stuart and I, was recruit Steve, because we had massive holes in our IT knowledge and ability. Certainly, our trainees that we brought in were far more skilled at IT than I was, and it helps. If we didn't have a Steve, they could have played a role in that. I helped someone who had a background as a marketing consultant find a role in a chartered firm. And I said to her, you can show really quite a good marketing background. Probably that firm could do with a bit of marketing input and help. Emphasise that one. Also, during our series of podcasts, I talked about Tom, who was one of our trainees who came to me as an almost qualified chartered accountant. We brought him in because I had the sort of the feeling that we could bringing him in and asking him to get involved with internal accounts for 2 days a month, massively streamlined our accounting process, gave us far more accurate, far more timely information. We were able to bring the whole thing back in-house. He trained another member of staff up on the basic bookkeeping, etc. We were able to save quite a lot of money in bookkeeping costs, but it wasn't that particularly that turned me on. It was the fact that we massively improved our financial accounting, our management information. And the quid pro quo was we trained Tom up as a chartered financial planner. So all those sorts of transferable skills, you might not immediately think they're transferable, but an awful lot of proper professional financial planning firms are relatively small businesses. And anything that you can perhaps add to the infrastructure of that business and the running of that business could be welcomed. And you never know, you might drop lucky. So this comes back to the sort of the covering letter. What you're really trying to do with that is put somebody in a position where they want to meet you, to talk to you, to explore things in a bit more detail. And I think a handwritten letter, hand delivered, if it's feasible to do it, that counted for something with me. I don't know whether it does with everybody else. But I think every little thing you can do to show that you're interested and you're keen should logically count in your favour. I think the other thing that you need to sort of think about is starting a new career is going to be a bit of upheaval from all sorts of perspectives. The starting point is you probably got to be prepared to start at the bottom. It's not necessarily the case, and some firms would like to get people through the exams, get them competent, get them out there advising clients and generating fees. They just like to do that because they see this as an income generation role. We took quite a different view because we felt that people became better advisors if they had some time in the back office. And I think if you're moving into a new career, even though you might be learning the technical knowledge through exams, it's still better to see it being applied in a back office. And one of the other crucial things is spending time in a back office makes you realise that a financial advice firm is really it's a collection of people. It's links in a chain. There is a process to be gone through, and every bit of that process is important. It also shows you what's involved in processing the advice that you might give, what's required in order to get the information about a client that you might need before you can give the advice. And it just shows you how much time and effort can be involved in these things. Now, from my perspective, that also means you're likely to be better integrated into the team. You are more likely to understand, when you're sitting in front of a client, it's very easy to make some promises in terms of things like service and delivery and all this kind of stuff. I certainly worked with financial advisors who had very little respect for what went on in the back office, and this is in the early part of my career, I would emphasise. But they had very little respect for what went on in the back office. So they'd make all sorts of promises to the client about, oh yeah, we'll have that to you next week. Probably, actually, in full knowledge, that was going to be extremely difficult for somebody in the back office to actually deliver. What then happens is a rift begins to develop between the people on the front end dealing with the client and the people in the back office doing the nitty-gritty. So all that experience in the back office really helps. And I think every trainee I ever worked with always sort of said to me that made me a better advisor. I didn't experience that because I was straight onto the front line. But certainly, particularly when I started leading and managing businesses, I was very, very aware of what went on in the back office. And I was very, very aware if advisors on the front line were not respecting it and not acting like proper team members.
So here's a question for you, Dave. Would you recommend somebody specialising in a niche part of financial planning?
Yeah, and I think actually, James, this sort of comes back to think about this before you make the approach. Because one way or another, most financial advice firms are going to want you out there developing your own client base. Okay, there are, again, a real spectrum. In Centurion, nobody had any business development targets, requirements. We did all of the business development at the top level, the strategic level, through professional connections. That is rare. Most firms will want to see you being out there, developing your own clients, building your own fee base. Now, when it comes to doing that, I've always said that the secret of whatever success I had came down to niching. And by niching, what I mean is niching, specialising in either certain fields of advice or in certain types of clients. And my niches, I think, were pretty well known. You know, the all sorts of what the FCA would term vulnerable client spectrum, the injury, the later life, the special needs, the trusts, the court of protection. So why did I pick those niches? Well, it started with personal interest, obviously, with my son, but they switched me on because they were technically very interesting and very complex. Now, because they're quite complex areas, that's a natural barrier to entry. Not every financial advisor has got this knowledge. But I also picked up those niches, not because I felt they were also very enjoyable, very challenging, and very worthwhile, but also from a commercial perspective, they were always going to be in demand. And not many people got on top of those subjects, I don't think, to the extent I did. I became totally immersed in it. So some of those areas require people, literally the law requires people to take advice. So things like professional deputies, they are required to take financial advice. What they want is someone who understands what a deputy's responsibilities are, etc. So think about niches. I am, at the moment, one of my little retirement projects is I'm working with some ex-military veterans, just helping them free of charge to understand the Armed Forces Compensation Scheme. Because they have been asked by, let's call it a charity involved in veterans' welfare, amongst other things, to be an outlet for financial advice for particularly injured veterans. But these ex-veterans, now financial advisors, are sort of identified, if you like, that they have an awful lot of affinity with other veterans. And there is a market for financial advice because leaving the armed forces, however you leave it, whether you leave it with a serious injury and a disability or whether you just leave it because of retirement, that is a traumatic life stage. You're going from one environment to a very different environment, i.e. civilian life. There is an opportunity, there is a need probably to take some financial advice on all of this. The veterans have a natural affinity because they all spent many years in the armed forces. So I'm helping them assimilate the technical bit, which is the bit they haven't got. But they are far better equipped to deal with veterans and serving forces people. They're far better equipped from every other perspective than I am. I'm just adding a little bit of technical knowledge on top of what they've got. That's a great example. I know ex-professional sports people who specialise in dealing with professional sports people. It's what have I got in common with these people? And what kind of technical advice do I want to give? Because I think you need something these days to mark you out. Just looking at firms' websites, with an experienced eye, can see various sort of things that mark a firm out. My firm used to offer various specialist subjects. They've actually now restructured the firm into specialist teams. Centurion Chartered Financial Planners looks much more now like a law or accountancy firm where it's got different departments. But the vast majority of firms, they talk about, some of them just talk about, life insurance, pensions, investments, mortgages, coming back to this product-based approach. There's nothing special in there. Why would a client want to go to that firm? Other firms talk about cash flow modelling as a term that's often bandied about. So many firms are offering that. So many firms offer pension advice. There's nothing really to sort of mark people out. So focus on a niche. See where, look beyond the first stage. As I say, the first stage is get your exams passed and get competent advisor status. But when you're talking about a career in financial advice, it's not the next 2 to 3 years that matter. And I can say this with the benefit of hindsight now. When I was starting my transition across into financial advice, I was very much focused on the here and now. I've got to get through my exams. I've got to earn a living, which in my case meant selling enough products, investment, pension to earn a living. I've got to do that. I sort of lost sight of the longer term. I always had it in the back of my mind. I want to come out of this and do it my own way. But I had to, even I, who had that aim in mind, I had to literally take a step back and focus on that to make sure that I didn't lose sight of it. So I always say, have the longer term in mind. Where am I going to build my business? Where am I going to build my client base? And one of the other attractions, I think, if you're approaching a firm directly, is if you can include in your covering letter, difficult perhaps to do it in a covering letter because, as I say, you've only really got one page, but certainly one thing you want to get across is I've got some semblance of a long-term business plan in mind here. I'm not someone who just wants to be put through exams and all that kind of stuff. I am also thinking ahead. This is what I can add to your firm. And, I know, for example, I am talking to people who are currently serving in the armed forces. I was, as I say, I've now pulled out of really talking to prospective new advisors. But I'm talking to them. I'm saying, that's one of your skill sets. I've also talked, there's a little group of 5 ex-chartered accountants who are now all training as financial advisors. And the first thing I said to all of them is, your major strength is exactly what mine was when I set out. I was a chartered accountant. My logical starting point was to go and talk to other local firms of chartered accountants and explain how I could bolt additional services onto what they were offering. All helps. So think ahead, because if you've got a business plan in mind, there's 2 things there. One is it will assure a business owner that you have a long-term aim and a long-term commitment in mind. But it'll also show that you've got some sort of commercial thinking going on in your head. I know this is about building a client base. This is how I'm going to do it.
Given how hard it is to find opportunities within financial services, what are your thoughts on setting up on your own and going self-employed?
Yeah, I think in general, I don't recommend that people do that. I think I have been self-employed. I think times have moved on, James. I think if you want to be a proper professional advisor, does setting up on your own send out the right signals? I mean, I've always said to people, I wouldn't instruct a sole practitioner myself. The reasons are probably twofold. One is I would be worried about things like longevity. I would be worried about continuity in the event of some sort of tragedy happening. But I would also be concerned about any single person's ability to offer the full spectrum of advice that I might need competently. And I'm also talking then, I'm well known for talking about how I think it's impossible for any single advisor to deal with all clients at all stages through life, no matter what happens to them. I look back on my own life, I certainly had a couple of shocks employment-wise. That was pretty straightforward to deal with. I then had a child with quite severe special needs. I actually built up quite a reasonable amount of wealth and quite a complicated financial position. But as I was doing that, my parents and parents-in-law were all developing really serious health issues. I was able to advise them because I specialised in that area. But if, for example, I dealt with several clients who'd had catastrophic injuries on the way through. Fortunately, that never happened or hasn't happened to me yet. But a catastrophic injury requires specialist input from all sorts of different perspectives, and not many financial planners, financial advisors, are properly geared up to give that advice. So I suppose my point is, and also, James, being on your own is very lonely, and I started a firm up on my own. I was self-employed. I always found it quite lonely. I was always, because it's the way I think, aware of my limitations. Stuart and I set up Centurion, and one of the reasons we came together to set up Centurion was because we were very much of the same mind. We want to make this a bigger thing. We want to bring more people into this. We would rather have a smaller stake in a bigger whole. We believe in properly collaborative firms where people are bouncing ideas off each other, where they're helping each other out, where everyone's got a common goal in mind, which is building a firm. A lot easier said than done. A lot easier said than done. But as a starting point, I sort of say to people, if you're going self-employed, think about, is there anybody else in your circle? One of the other things I always say to people is network. Go to training events, go to institute events, go to business events. You never know who you meet. Look around your own firm. Are there other people that you really do see eye to eye with? And if you're thinking about going on your own, have a conversation with people. Are they attracted to the idea? I know a firm in Bristol which was set up by a guy who used to work with me and an ex-colleague. The two of them set up deliberately because they knew each other, they got on very well. Their firm has gone far better because of the two of them. I knew another firm that set up with 5 ex-colleagues coming together to form it. The firm did far better than any of the 5 of them would have done on their own. But the other point is, I suppose, if you're going to be self-employed and you're going to be a regulated advisor, it's going to be very difficult. I always say to people, the only way to get full control is direct authorization. That's the only way you can control both the quality of the advice you give, the nature of the advice you give, and how you give it. If you're going to be self-employed, you're going to have to go through some sort of umbrella authorization with a directly authorized firm, or you're going to have to become part of a network. I was never part of a network because I just think I find it so frustrating. And I'm not going to comment on the quality of networks, etc. They vary. I'm sure there's some very good ones, but at the end of the day, they're all responsible for the advice. They therefore have to control it. I think it is virtually impossible these days to practically get a direct authorization as a sole practitioner. This is what I hear. The FCA doesn't like small firms. I'm with it on that, actually, because I think small firms, sole practitioners, they're not healthy, not either for practitioners or for clients. But one of the crucial things is there's no division of responsibility. And I think we've seen quite a lot of examples where that lack of oversight by a business partner or something has ended really quite unfortunately for some people. It's also going to be relatively expensive to set up on your own as well. The idea of coming together and creating bigger firms is that it helps you sort of dissolve your overheads. As you grow, your overheads as a percentage of your turnover should naturally begin to shrink. it helps with profitability. Coming together increases things like purchasing power. If you're self-employed through a network, you've got very little purchasing power when it comes to things like investment charges. You're going to be dictated to on that. Whereas if you build a proper firm by coming together with people, at Centurion, I don't know what the guy's influence now, but it used to be something in the region of £750 million. That gives you some serious purchasing power. It also, for example, enabled us to fund the building of our own investment platform, which reduced charges for clients even further. But not only that, made us far more efficient because we weren't having to use 3 different third-party platforms in order to do everything we needed for all of our clients. So coming together, simply, James, is much more fun as long as you do it with the right people. If you collaborate with the wrong people, you're going to be better off being self-employed on your own. And I think, sadly, this is what happened. I've talked to some people about this, and sadly, some people have gone on their own because they got together with the wrong people. Both Stuart and I had unfortunate experiences with other businesses that we'd been involved in. But, we realised we got on very well as people, and that's a great starting point, and it went hugely well for both of us. So I would always sort of say, think very seriously, because particularly I think it's much more difficult to build a business as a self-employed person. Some people might well disagree with that, but philosophically, would I as a client want to deal with a sole practitioner? No, I wouldn't. And I am by no means the most complex high net worth client that you'd ever come across. I can only think the more complex and high net worth I am, the more I want to see big solid infrastructure. And partly, James, I think one of the secrets of the success of certain big, massive organisations, I debate their quality and all that kind of stuff, but one of the big advantages they've got is critical mass, and clients like critical mass as a general principle.
Okay.
So yeah, difficult to go self-employed. I wouldn't. If I had my time again, I think I said on those podcasts, the best thing I ever did was get together with other people who saw things the same way I did and build a proper firm.
Okay. We haven't talked about qualifications yet, so it might be worth just talking about that. What do you advise an aspiring financial planner to do?
I think to some extent, James, that comes down to sort of doing a bit of research on what is a financial advisor. What kind of firm do I want to work within? How do I want to go about providing whatever service I'm going to do over the long term? Because there are broadly 3 professional bodies involved. I was a chartered financial planner. I was a certified financial planner. I qualified as a certified financial planner through the IFP in about 1999 or 2000, something like that. It was a long, long time ago when the IFP was a very small, very sort of close group of individuals, all dedicated to the cause of, let's call it, proper financial planning, as opposed to product and investment recommendations. I thought it was a great body. I actually learned, my history and the help I got from David Norton is very well known as well, but he was a leading light in the IFP. And I got a huge amount out of that qualification. It fundamentally changed my point of view. It didn't change my point of view. It reinforced my point of view that this was about planning, not product. So I would say if you're of a like mind, probably the route to go is the CISI rather than the CII. I think one thing I'm absolutely sure of is that professional financial advice needs its own professional body. One of the beefs I've got is that the two biggest bodies, you've got the PFS, which is a kind of subset of the CII, the Chartered Insurance Institute. You have the CISI, which is sort of the financial planning side, is a subset of the investment industry. I actually think professional financial planning is its own discipline. It needs its own professional body. And I think the IFP was sort of ahead of its time. It was just too small to be feasible. Not enough people got this message about things like proper financial planning and proper scenario modelling, cash flow modelling as it's known, etc., etc. So it had to move itself into a bigger organisation. It chose the CISI for various reasons. But I think, there is a need for a proper dedicated professional body. But given the choice that we've got, and the third one, obviously, is the London Institute of Banking and Finance. I must admit, I don't know too much about it. I was never involved in it. I think the Chartered and the CSI qualification, their Chartered qualification, they're both well recognised now. But I think some firms probably will prefer one or the other. And I think the firms that are more into the planning rather than the product logically will prefer the CISI route. If I had my time again and if somebody said to me, which one would you choose? I would choose the CISI personally. Both will enable you to use the term chartered. I think that's a term that matters when it comes to the consumer. I don't think chartered is actually necessarily any real assurance of professionalism, but I think the public see it as such. So it's important, I think, to get a chartered qualification. As I say, if I had to choose between one or the other, I would choose CISI. But I think more firms probably train down the PFS route. I don't really know. But I think one thing, I think the qualifications are pretty portable, because I think one point I'd make is before you start approaching firms, it is good to get a couple of exams under your belt. Broadly speaking, you're going to need 6 or 7 to get competent advisor status. If you can get a couple of those under your belt, you will show to a prospective employer a number of things. One is you're committed. You've actually put yourself through a couple of these exams. You have almost certainly funded yourself, so you're happy to put your money where your mouth is. That again says something about character. The third thing is you will show a prospective employer, as long as you've done the right subjects, that you have a degree of technical competence. You have the ability to absorb the kind of knowledge that you need to absorb, and at least you can regurgitate it in an exam setting. And I suppose fourthly, you'll also save them a bit of cost. The cost of exams is not certainly by any means the biggest element of funding a trainee financial advisor, but it all helps, doesn't it? So if you get a couple of exams, that I think really does help before you start making an approach to a firm. It would impress me. And then I think, well, okay, you've then got to, if you're going to do a couple of exams, you've got to plump for which body you do it with. And I would say that probably your choice comes back to what kind of firm are you going to look for? Do you want to be more product, or do you want to be more planning? If you want to be more planning, go CISI. If you want to be more product, possibly go PFS. But I think I'm right in saying, and you would need to check this because I'm a bit out of touch when it comes to exams, but I think I'm right in saying that they're pretty portable. So you would get credit with one body for any equivalent exam you've done with the different one.
Let me just interject there, Dave. So I think that I'll do the BBC bit now in terms of the in fairness and balance from a recruitment perspective. What we see with regards to qualifications,
you're in a better position.
So what we see from a qualifications perspective, certainly the more experienced you are, employers tend to look at the PFS, the CII. So just bear that in mind, when you are researching what you're looking to do. The PFS has a large membership, but it's widely recognised within the majority of financial planning firms.
Yeah, I mean, certainly I think that's fair comment. I think it is bigger, and I think I said, more firms probably would want the PFS. Me personally, it wouldn't really matter to me. It might be important to some firms, and probably, James, I suppose what I'd say is, if in doubt, go PFS. More firms probably do recognise it. I think, and you're the expert on this. Certainly, I was PFS qualified or equivalent before I became CISI.
I think the important thing is becoming chartered.
Yes, absolutely.
Chartered shows the level of competence and dedication to the profession.
Yeah. And as I say, there's more to this than passing exams. Obviously, passing exams is a threshold because you've got the theoretical knowledge you need and you've proved it. It is the key step to getting competent advisor status. But when it comes to competent advisor status, there are no real guidelines out there. If you train as a chartered accountant or a solicitor, you have to follow, and your firm has to follow, a pretty well laid out process. You would only be signed off as competent once that process has been gone through and properly evidenced. There is no equivalent in financial advice. It all comes down to the particular firm involved. But technical knowledge is an important thing. And by getting a couple of exams, you will show people that you have at least got the ability to absorb and regurgitate the knowledge required, at least in an exam setting. But on this, I also say to people, a lot of people, if they do go PFS, and those are the sort of exams I do know better, because my own trainees, to be fair, James, we put them through the CII route. We won't get into my thoughts on the PFS and the CII. I think I've documented those before. But what I always say to people is, you've got RO1, RO2, RO3, etc. I always say don't start with RO1. RO1 is all about compliance. Now, I take compliance seriously, but to me, compliance was never about dotting I's and crossing T's. And I freely admit I never read the rule book. I just behaved like a professional, and it stood me in good stead. But I think you won't learn much by taking RO1. When you join a firm as a trainee financial advisor, you won't be asked to form a view on compliance. You will be told what to do. You will be told what advice you can give, how you document it, the process you go through to deliver it. So you've got to be aware of the regulator and the rules and regulations in a general sense, but you won't learn much and it won't help your career. And also, I think most business owners won't be too impressed if you passed RO1. They'll be far more impressed if you passed probably RO2, which is the investment principles piece. That shows that you can absorb the technical knowledge, that you can understand the concepts involved in investing money, you can explain them, all that kind of stuff. But what it will also show to you is that, yes, I can absorb this knowledge, and actually, do I enjoy studying this stuff and absorbing it and explaining it? Because if I don't, if I'm finding this difficult, a career in financial advice really isn't for me. And I think I said during one of our previous podcasts, one of the reasons I never became a pension specialist was because I sat the only exam I ever took and failed was the old G60 exam. And I couldn't get my head around certain aspects of defined benefit pension schemes. It was just gobbledygook to me. I wasn't interested. I couldn't absorb the technicalities. And I say that as quite a technical person. Whereas when I took my trust exams, I found a massive affinity with it. I really enjoyed studying it. So I suppose what I'm sort of saying is doing these exams in the right order or picking a couple off will help your thought process longer term. It will show to you whether you actually enjoy this, whether you're suitable, whether you're going to find this hard work or not. But you will also learn something interesting. Even if you took RO2 and didn't go on to be a financial advisor, it will help you in your own life. Learning RO1 won't really help you unless you definitely do go on and become a financial advisor. But as I say, it's not showing much technical ability or knowledge absorbing RO1. I always used to start my trainees on RO2. We always left RO1 till the end. And I sort of rather, I suppose, jokingly said, leave the boring one till last. Mm-hmm. If that's the last one that you've got to take, you've got a real incentive to pass it. But we're not expecting you to be compliance experts. We are not expecting you to be forming your own views on compliance because the firm will tell you about what you are competent to do, how you give the advice and all that kind of stuff, and what our process for giving advice is. So, most people would learn RO1 and then just put it right to the back of the mind.
Okay. Is there anything else you want to cover, Dave?
I suppose what I was also going to say to people, James, I think a few other things that you can benefit from. Very. I made the decision to become a financial advisor and transition from a career in chartered accountancy probably over the course of about a year. There's going to be serious implications in terms of having to learn a lot of new stuff. There are probably going to be implications in terms of your personal financial position, etc. So don't make this decision at the drop of a hat. Think it through properly, and take a year or so to make that decision. I think being too impatient can really do you a great disservice longer term. Think it through, take a couple of exams, check that you actually enjoy this, but also begin to do some networking. And organisations such as Next Gen Planners, they will help you get through the exams, actually. But apart from anything else, you'll be networking with a lot of other people who are in the same sort of position as you. And I do think Next Gen Planners is really quite a good organisation in terms of sort of helping people understand what financial advice is and helping them make connections. And put your feelers out. Try and make contact with existing financial advisors. Talk to them about what they do and how they do it, and what they like about it and what maybe they don't like about it, etc. All this networking will help, and you never know, when it comes to actually looking for an opportunity, if you've built a relationship with somebody, it might help you identify which firm to talk to. And I think, on LinkedIn, most sort of people who've had a good, successful career and built a decent sort of firm, most people seem happy to give a bit of time to other people who are either looking to get into the sector or are at a much more junior stage.
I guess my question, if we're going to do a final thought, is what do you think is the single most important piece of advice you can give somebody looking to enter the profession?
I think what I could say, James, is something along the lines of it's if you do this well, I suppose one point to get across is do put your clients first. Take a long-term approach. I had a successful career by most people's standards in whatever way you want to measure it. I earned reasonably well out of this financially. I've got a very nice lifestyle now. I really enjoyed getting to the bottom of clients' needs, worries, concerns, objectives, and helping them put together strategies to achieve or address those things. So it's a fantastically rewarding career, done well. And I suppose the thing, as I say, I always had in mind was the long term. Never did I ever legitimately put my earnings first. I didn't. I always took the view that if I behaved like a proper professional, I got on top of my subject, presented my knowledge and experience very professionally, explained things in words of English, and charged for my services and my knowledge in a very transparent and very honest way, I had no doubt a reasonable living would follow, and it very definitely did. So I think that's the thing to really bear in mind. Done well, this could be an absolutely fantastic career, a very enjoyable career, a very worthwhile career. Done badly, it can cause you all sorts of sleepless nights and stress. And worse than that, you could really mess up somebody's life. So it's down to individuals to form their own view on exactly how they want to go about this. But, I'd highly recommend it. I've really enjoyed my career. You can tell that because I'm still kind of hanging on after retirement. So, but yeah, I suppose that'd be my final comment, really.
Well, Dave Robinson, always a pleasure, never a chore. Some very valuable advice through this recorded video. We will leave the relevant links within the description so people can follow who you've mentioned. And as ever, always worthwhile. And thank you for your time.
And thank you, James. You've probably saved me 2 days a week, and I can now slope off into retirement. So
right. I'll send you my invoice.
Thank you very much.
Cheers, Dave. No, that's great.
See you later. Bye.
Yeah.
Cheers, Ed.